Hello, everybody. At this time, we are talking about securities valuation. Securities valuation involves estimating the value of a firm's financial instruments, such as stocks, bonds, shares, or whatever investment they may have. This respective value is then estimated consecutively with great concern to all market fluctuations, varying economic conditions, and past financial performances of the company. Estimation of this value is indispensable in carrying out effective investment decisions, in managing investment portfolios, and in generating reliable financial reports. In this way, the experts can choose a valuation technique that fits the business best in completing the entire process of securities appraisal. And then we move to the methods can be used for the valuation of securities. The first method, discounted cash flow or DCF analysis. It calculates the present value of a security as per its estimated future cash flows for companies with regular fixed cash flows. The cash flows have to be adjusted to the current value after executing a discount rate accounting for the risk level of the investment. The second method, capital asset pricing model or CAPM. It can be used for calculating security value as per expected return, ensuring the risk investors take while investing in such security. And then third method, comparative analysis. It involves contrasting securities to equitable assets listed in the market, also termed relative valuation. It uses metrics like price to value and price to earnings ratio, along with other multiples for evaluating how any security compares with its peers. And then fourth, option pricing model. It was tools like the Black-Scholes model for valuing options and derivative securities. Such models take into account the expiration date, volatility, and underlying price of the asset. And then fifth, asset-based valuation. It mainly centers on a company's asset instead of its market performance or earnings. It becomes crucial company valuation to assess liquidation value or having large tangible assets. And then six, dividend discount model or WDM. It works only for major and stable dividend paying companies by calculating their stock value per the current value of estimated future dividends. And then what is the future of valuation of securities? Some of the major factors that will influence the future of valuation are the first, artificial intelligence or AI. It is one of the big guns that will shape the future of valuation of securities. This form of technology assist professional in mapping out market trends and patterns and keeping them in mind while determining the worth of certain securities. And then second, big data usage. The future of securities assessment will witness the usage of big data. The professionals will be more efficient in using new age technologies and techniques to analyze this data and give interpretations. They will integrate complex data and efficiently derive their valuable insights that enable investors to make mindful decisions. And then automation. Automation also has emerged as one of the main factors that is going to influence the future of this process. Automation will help professionals deal with big data because automation analyzes it faster and gives significant insights from it. It will help professionals get more time to focus on all significant tasks and detail depth with it efficiently. And then fourth, risk management tools. Risk management is a very vital aspect that the professional need to take into consideration. They must identify potential risks and uncertainties and make some strong strategies in order to avoid such things or reduce their effects on them. This will make the process of valuation be more correct and error-free. And then we move to the multiple challenges to the valuation of securities. The first, the company's financial performance can affect how it can make a profit, grow its sales, and stabilize its finances, affecting the valuation. Second, the level of liabilities and debts of a company directly impacts the valuation of its securities. Third, overall situation and trends of market and industry affect the thinking of investors regarding the valuation of their shares. And then fourth, investors bring in the aspect of future growth, entry, not new markets, and new products launches by companies, offering the valuation of securities by investors. And fifth, dividends and profits professionally affect how traders or investors can take the company's securities worth for their calculation. And then why is securities valuation important? Among the main reasons due to which this process of valuation is necessary are the first, investment decisions. The issue of securities valuation is important for potential investor to make informed investment decisions, which is only possible when professionals are able to estimate the securities correctly so that overpricing or underpricing does not take place. And then second, value reporting. The valuation process should also be done in such a way that it assists in financial reporting. Professionals can generate proper and correct financial reports so that business firms can rely on them for effective decisions and strategies. Then third, investment portfolio. Professionals can value securities and make a valid investment portfolio that will be useful for the professionals to make informed decisions in investment. I think it is enough. Thanks for watching.